Welcome to this week's Beyond Bitcoin Hangout. These hangouts are brought to you by the Beyond Bitcoin crew. We encourage everyone to freely share these recordings and to help spread the knowledge and benefits of our DPost 2.0 blockchain technology that we all call BitShares. While listening to this recording, please feel free to visit our website, beyondbitcoin.org, and be sure to stay tuned in for some additional information at the end of the recording. As always, we would like to say thank you, and we appreciate your support. So please continue to vote for our delegate or worker contract so we may continue providing these valuable services to our community members. So once again, welcome, and please enjoy this week's Hangout.
Welcome, everybody, to another Beyond Bitcoin Hangout. Today is Friday, December 4th, 2015. We are joined again by Bytemaster for his weekly update for Cryptonomex and what the Cryptonomex team is doing for BitShares. He gets with us every week to provide updates and also take community questions and comments regarding, sometimes he has questions himself, right? So with that said, we try to keep the first 10 to 15 minutes open for Bytemaster to give any project updates or to bring up any subjects that he would like to cover today. And from there, we'll try to start moving into community discussion. And with that said, Bytemaster, I'm going to go ahead and I'm going to step back and let you begin with your updates.
All right. It's never a dull week in the realm of BitShares. I've really enjoyed watching the community get more involved, both in the committee and trying to resolve problems on its own. So I'm really proud of all you guys. And even though there's a lot of controversy over where the right decision's made, the point is that we have the controversy in the first place. That means people are engaged and that people are thinking about what's best for BitShares. And that's always a good thing. So a quick update on stuff we've been working on this week is a series of changes that we're going to roll out into a single hard fork. And those include to refund order creation fees if the order is filled, to fix the referral program's cashback allocation that was off by a factor of 100, and to fix the margin call price so that it doesn't call unless the feed is less than the call price. But once it is called, it will match up to 10% more trying to fill it. That should prevent a lot of margin calls from occurring in the first place. The other things we're looking at potentially rolling out in the same hard fork is a maker-taker differentiation in fees. If you have an order on the books and it gets matched, you don't pay a fee. If you're the one that creates a new order and it gets matched immediately, you're considered a taker and you're the one that pays the market fee. This would be a new flag on the assets that the issuer can control. The goal is to improve liquidity. Market makers can then leave orders on the books on either side, and they won't pay any market fees to the network because they're providing liquidity. The network will only make its money, or the issuer will only make its money from the takers. Now that's a flag, that's a setting that each asset will be different, but I think that is a universally desired enhancement, which should make those who want to write bots very, very happy. It means if you write a bot, you can make money. You don't pay any fees whatsoever if you leave an order on the books and it gets filled. And when you move your order, you just pay just a small fee to cover the spam. But if it doesn't get filled, you're not paying any fees either, which means we're really trying to reduce the cost of providing liquidity in the network, which will hopefully help reduce the spreads and get more people involved in bots. So that's the start of our liquidity campaign. I got some other ideas I'd like to discuss on that front here in a bit.
Did you say that the referral bug, the issue where the witnesses can't withdraw their pay, is going to be in this hard fork too?
Yes.
Thank you.
And so we're really trying to make sure that we roll out as many hard forking changes at one time as possible to minimize the number of times we have to ask exchanges and everyone else to upgrade. We're also being very deliberate in making sure everything is tested. So a lot of these features that we're talking about are already implemented. For example, I've already implemented the maker-taker change. It's just a matter of getting the tests in there to prove that it works and prove that we didn't screw anything up. And that takes 10 times longer than it takes to make the change. So we can recover the Rube market in this hard fork. I suppose that's something that we could do. I'll look into what it would take to unset that flag. Yeah, there's another one, SEK market. Total amount of funds in Black Swan state are less than like $10. So it was an artifact of poor price feeds and poor liquidity. So I think doing it as part of this hard fork that uses the price feed would be good. We'll just have to decide how to resolve those positions. All right, so let's talk about two things. One, how to improve liquidity, and two, how to improve adoption of BitShares. The key for any exchange getting bootstrapped is unique assets, things that you can't trade anywhere else, and assets which have value to people to be able to buy and trade. So just being another cryptocurrency exchange where you can trade Doge and Bitcoin and Litecoin is not market differentiating. There's already dozens of places where you can do that and have a perfectly safe experience. But BitShares has the potential to offer markets that don't exist in other exchanges, markets that can have a lot of value to people. And I'd like to start with the concept that we replace the gold, silver markets, which are tied to BitShares speculation, and have a new bit asset that is gold backed by BitUSD and silver backed by BitUSD. And do the same thing for a couple other commodities like gasoline, oil, things that are volatile, that people might want to hedge against, that's difficult for the average person to get exposure to. Get a couple of these markets bootstrapped, and by tying it to the dollar as the collateral, you simultaneously increase liquidity and the need for BitUSD, as well as have the speculators in the BitUSD gold market be tied to assets that they know and trust, rather than having to factor in the speculation of what is BitShares going to do this week, right? Now, if we can factor BitShares out of the equation for the traders, then they can just apply everything they know about gold and dollars and silver and dollars and the gold-silver ratio to trade those assets. So now if we can also use a similar asset backed by CNY. I'm not necessarily saying I prefer one or the other. I'm saying that we should have, it should be tied to something stable, something that people can reason about as the collateral, rather than having the collateral be something that is extremely volatile. So whether it's USD or CNY, doesn't really matter. We've got two different markets. Now we can have both, right? Two different types of gold. But that, of course, divides our liquidity between the two. But either way, creating and marketing those assets as the purpose of our exchange, right? The purpose of BitShares is to allow the average person to hedge their wealth against the fiat world. I think that's a bigger purpose than saying, well, we have price stable cryptocurrencies tied to a fiat currency that can be hyperinflated away. That's the kind of thing we're looking at as trying real value, real differentiator, something that when you tell people, why should you trade on BitShares? Well, it's because you can do this on BitShares and you can't do it anywhere else. So someone proposed that we change the name of BitUSD to Bucks, BUX. I like it. Quick, register the name Bucks. So that's that's my thinking there. And by doing so, we simultaneously support two markets and trading and liquidity. If there's any thoughts on that strategy, let me know.
Great idea. Awesome.
Well, have you by chance talked to Mavericap, who's creating a BitUSD based wallet?
Yeah, he's hiring us to do a lot of the work on it.
Oh, interesting. So does this have any connection to that in any way, or can you not say, or?
This has nothing to do with that.
I would like to see an additional UIA for additional coin for the currency backed the BitCNY or the CNY and the USD backed gold, as opposed to replacing the existing one. I think there's a good use to have the existing one if things heat up in our market cap.
I agree. Having gold USD and gold CNY markets would be good. Now it's an opportunity for someone to create those assets as private bit assets, to specify feed producers, which accounts get to be the feed producers, and go market and promote it. I'm suggesting that as a community, we should probably pick a few of these special case markets, something that's unique that we can allow people to get into. But I would really like to see a lot of innovation of other people creating these types of markets and benefiting from it. You can get some of these things trading. All you need is a price feed and a server and some advertising, and you start making money as people start trading your asset. I guess a little bit of liquidity. So let's talk about liquidity, because we talk about various strategies of increasing liquidity, such as lowering the fees. That's one way of increasing liquidity. People suggest that maybe the rules are wrong, that it favors one side of the market more than another, and that's why you don't have liquidity. And I like to, someone is...
Got him.
All right. When it comes to like the rules of a particular asset, they don't really affect liquidity. They affect the equilibrium price. So we can change the fees. We can change where forced settlement occurs. We can change any of those parameters, and that's going to change the market's assessment of the equilibrium price, the price at which demand for going short equals the supply of people who are willing to pay a premium, right, for the price stability. There's some price, and it's some offset, and if you change the parameters, you move where that equilibrium price is, but you don't get any extra liquidity. Of course, reducing fees does help with liquidity because it reduces spread. It makes it cheaper for people to run bots, which means people are more likely to provide bots, because we've reduced the friction of things. But you can only reduce the fees to so far. Once fees go to zero, which is where we're putting the fees for liquidity providers, you still have other risks associated with providing liquidity. Those risks are still a friction. They're not, and unless they're compensated for, unless those risks are compensated for, there's not going to be as much demand to provide liquidity, because there's still some cost there. So there's three different players in the market. There's the buy side, there's the sell side, and then there's the market itself, the BitShares side. BitShares benefits from the other two sides trading. BitShares is the one that benefits when there's liquidity in the market, which, of course, everyone benefits from liquidity, but BitShares in particular. So right now, BitShares is profiting off of these market fees, but it's not investing in incentivizing liquidity in a positive way, right? We've removed a lot of the barriers, but I want to move to the point where we actually start paying and rewarding those who provide liquidity with actual profits, income. So you can view each market as its own little mini business, its own profit center, where it's generating profits from market fees, and it's got expenses associated with marketing and promoting that product. We can promote BitShares, but that's like Apple just advertising, hey, Apple's a cool company. You should come check us out. We got cool products. but never advertising the iPhone or their computers, right? We need to independently incentivize and promote each individual asset. We got to invest in each asset. And we should reward those who help bootstrap those assets with the revenue generated by those assets. And it's kind of like jump starting a car. You need a lot of energy to get it started, but once it's started, you don't need to keep providing that initial energy, right? It's up and running. It's the same way with liquidity. Liquidity brings liquidity. The first people to the market are the ones who bootstrap it. They're providing a lot of value and taking the most risk. The last person into a market, they're providing relatively little marginal utility, little value, and they're taking the least risk. So what we'd like to do is to shift the future income of a particular market to the people who are the entrepreneurs, the risk takers, the early adopters of the market. And to the extent that we can provide that incentive shift, lots of people will come in and say, well, I'm going to provide liquidity for this market because I think this market's going to be big in the future. And I don't care if it's small right now or I'm losing a little bit of money on my trades today, because I'm going to make it up in the future when this market is very active and I don't have to take risks anymore. I don't even have to provide liquidity in the future in order to profit from providing liquidity today. So by shifting the future revenue stream, the present value of all future market fees in a given market to the people who provide liquidity today, the makers, we can see a huge profit opportunity to come in here, provide liquidity even at a loss today, because the loss today is really an investment in purchasing shares in that market in the future, which means it will be far more effective than simply taking the fees that the taker is paying and giving it to the maker today. Well, that makes you money today. All that does is shift the price today down a little bit. It doesn't provide the incentive, the leveraged incentive, if you will, order magnitude more power by sharing the long-term profits. I think that with the right incentives, this thing can really take off. I'm looking for some feedback here. I know some people have expressed the opinion that it's too complex and that we don't need more complexity with our system. And the first thing I'd like to say on that front is normal users don't have to do anything different. The only people that have to be aware of this extra incentive are those who want to take advantage of it. And so it shouldn't add complexity to the default use case. It should, at the end of the day, result in makers ending up with an extra user-issued asset or chain-issued asset in their account that is automatically populated just as they're doing their regular trading, and for which they can sell into a buy wall that the blockchain. So are there any questions on the idea? Any concerns?
Clout has a lot of ideas about this this type of stuff that he's been talking about on the forums. Are you able to talk, Clout? Because I know he was looking at creating some initiatives himself. LuckyBits asks, will it compete with Obits?
Nope. Obits is a revenue stream on referral income for OpenLedger, as well as other things that OpenLedger Assets is doing. So OpenLedger is trying to incentivize people with their own token as a way of sharing their revenue. This would be creating another token that's sharing a different revenue stream. And so it's a different opportunity where the risk reward it's designed to provide a business for market makers, whereas Obits is designed to encourage referrals, and they don't overlap.
Thank you very much. Will J890 is saying, so we would get some sort of share in the market we are making. And
yes,
it was correct.
This whole concept of having assets pay individual investors money is something that's a security risk if it's done by an individual, which it's been surfaced recently that the whole idea of the blockchain itself issuing these assets, which we all can purchase, which represent revenue streams, is a great idea. Has this been thought of in the past, Bytemaster? It seems like it has, but I don't know why we haven't implemented that blockchain issued asset type of thing for revenue streams in the past.
We've talked about it. The whole purpose of smart contracts and blockchains was the contract-free society. Contract-free meaning obligation-free, which means not a security, right? Securities derive their value solely from the future effort of someone else, whereas the value of these assets is not derived by the future effort of someone else. It's derived by an automated process that's controlled by actual users in the system. That's a huge distinction, which puts these type of revenue sharing things in much more solid ground. I think things like obits could be made less of a security if the distribution and the buyback was automated on the blockchain versus being something where CCEDK and OpenLedger have to buy it back. But they've looked at the laws in their country and feel that they're safe doing what they're doing. So that's that. But I think it's beneficial for everyone, and we get more innovation and more interesting assets because whenever we create one of these profit sharing assets, we do something else. We create another market that you can only trade on BitShares, right? That causes more users, more trading, more activity, more opportunities to crowdfund things. So you can crowdfund a new bit asset and have all the liquidity crowdfunded by the people investing in that asset. Success.
Is the return of the proceeds from the sale of the fees collected, et cetera, the revenue stream, is that something that the UIA is currently not capable of distributing to anybody that participates or purchases the UIA? If so, then that seems like it's a mechanism that would facilitate this so that anybody that made a UIA would have the option of returning the revenue stream to the people that bought the UIA itself.
That would be a UIA buyback system where any income earned from that UIA trading is used to buy the UIA itself, which is a reallocation of funds from those who are doing trading to those who aren't doing trading. That's a way of having the speculators pay interest to the hoarders. But the primary way, I don't know whether that makes sense in general, but I do like the idea of assets that are automatically bought back as a result of income generated by the blockchain.
How do you organize an automatic buyback? I've seen other people talk about buying back the UIAs that they've issued, and I'm wondering how that can be automated and when would the trigger be when the buyback takes place?
Yeah, the buyback would take place on maintenance intervals, and it'd just take the best orders on the book whenever there's a maintenance interval. So if there's funds available to buy back, it goes and grabs them off the book and covers it. I wouldn't buy back on every fee. That would flood the network with tons of virtual operations in people's accounts, right? Every single trade will result in multiple other trades. It's not manageable, but having a daily buyback of accumulated fees would be how I'd implement it.
This would come directly from the blockchain doing it. So basically you could enable the asset to be for buyback or something like that.
Yes. And with such a system, I guess BitUSD liquidity could be subsidized by if you took the funds and you just used them to buy the asset back from the market, that would cause BitUSD to go up in value, which would increase the premium. So you don't want to do that. But for user-issued assets, I could see it making sense.
Can you go into, for the individuals here, why this would be better than, say, paying out to various assets, like Obits is doing?
This is just an automated version of what Obits is doing.
Oh, so you're saying so Obits is going to be doing the buyback then, as opposed to distributing dividends.
Yes.
Okay. Lucky Bit is saying, how much effort would it take to implement this automatic buyback function? And I guess a good question would be, like, in terms of hours, or what would CNX need to accomplish this?
The complexity isn't in the buyback. The complexity is in creating a parallel asset for, that represents the income stream for another asset, and then tying those two assets together in the blockchain. So there's some complexity there. There's not too much. On the BitUSD side, actually, what we can do is we can sell the BitUSD for BTS, so that the profits we get in BitUSD turn into BTS, and then we can take the BTS and return it to the reserve fund. That would be a way of reducing the premium on BitUSD. But anyway, so the complexity is there's a lot of moving parts in plumbing that up, so we do all the accounting right. The actual buyback itself is easy. It's the issuing and the accounting for who gets market shares.
Despet asks here, what do you think of Russia and their plan to have a bit ruble?
I'm not familiar with their details. Are they planning to do basically a government-backed crypto?
That's a good question. Can you explain any further, Dest? Or I know that there's Eric Sprott has a bit gold out there, and I know that the bit gold that they're creating is backed by apparently backed by gold, but I can't be 100% certain, and but I'm pretty sure that it's not using like the blockchain ledger to really ensure that the gold is there and has not been moved out, or that the gold is actually in the facility and truly backing what they say it's backing.
The bit ruble is a proposal not coming from the government, but from outside the government, where they're trying to discuss the project with the government. So I would say it's not interesting at all. Not until the government decides they want to back it.
Chris4210, Goldman Sachs is launching its own coin, Settlecoin. And I recall reading Goldman Sachs saying that the blockchain is on the center stage for 2016, which is very interesting. Do you have any input regarding that?
None. I think it's just the inevitable conclusion that all websites and businesses will be moving to a blockchain in one form or another in the years ahead. I think it's interesting they're creating their own coin. That shows they're 2 steps behind everyone else, but they'll get there. Everyone's moving forward.
True. There was a post. Well, first off, does anybody have any questions or comments? Because once I get started,
I just want to go back to asking, how do we actually change BitUSD to just bucks? We can drop the bit, even just BUX. How do we actually do that?
Create a new market pegged asset called BUX and start using it.
I just want to change BitUSD. I don't want to create a new asset.
You want to change the symbol of a current asset. So this gets into the questions people have asked. Can I change either my account name or my symbol name on my asset? We originally made those things immutable so that people's account history would be consistent. All right, we don't want to show that you were trading USD today. Now, nope, you were trading bucks. So we wanted to have a consistent thing that we could either change it all and go retroactively change USD to bucks everywhere. But
that gets very confusing.
Yeah, so the reason why we made those things something you can't change, even though I can see why people might want to change or rename them, is for that reason. But I'm torn, so I'm not necessarily convinced one way or another.
Wouldn't there just be a way to have a particular GUI that would call it that? And, if somebody has some product that they're marketing and they want to call it bucks and you're trading BitUSD, then they could just label it bucks in the GUI, right?
Yeah. The other thing I'd like to do is add the ability to put a currency symbol associated with the user issued asset. Currently, we don't have that at this point in time.
Do you have any clue, or maybe this is more a question for SVK, but when the privatized bit asset creation and those functions will be available in the GUI?
We would probably have to create a worker proposal to get that type of thing in there. So basically, based on what's on our plate, that's probably a ways off. But because everything is open source, anyone who has a desire to make a business around user issued assets or prediction markets, you can easily spend a little bit of time to create those interfaces. I think it would probably only take a week to put together a basic interface to have all the prediction market stuff in the GUI. Create the prediction market and then settle the prediction market. But it does require refactoring some of the borrow interfaces to handle prediction market assets. But I think that having prediction markets would be huge, and I definitely want it. We're primarily constrained by man hours on our side. So the more people we can throw on it, or the more we can distribute it out to other startups, the better.
So you've officially changed the licensing then, right? I know you were talking about doing that. That's all officially done. It's now, what was that? What's the new license that it's all under?
Everything's under BSD. I don't know if the files have changed in the repository, but that's just a matter of us checking it in. You got my word, we're changing it to BSD licensing on the GUI and the backend.
Can you describe to people a little bit about the reasoning behind why you decided to do this?
There are many reasons. First, perhaps the most important reason is it's just licensing is not how businesses make money. It's not something that's investable. It wasn't really helpful in us raising money. The other is it's an open source project. The negative PR was probably doing more damage than the revenue we could get from attempting to license or attempting to restrict competition. And it's also just, it was always philosophically distasteful to me to try to make money using intellectual property. It was, so I feel much better about the whole thing being completely open. It was just a little bit of uncertainty about, well, can we raise money? Do we have a viable model? So we were being a little bit cautious of not giving everything away before we figured out what we would need to succeed. But we're going to go with our principles and say we will either make money doing it completely open, or not do it at all, is basically what it comes down to. So yes, I'm very happy about it being open. I feel much better about the whole licensing thing, and I think it can spur a lot more innovation for everyone involved.
And I guess your investors are okay with that decision, because your whole funding model, of course, is based on that approach. So the people that are funding the operation right now apparently were okay with this change.
Yeah, well, it's a matter of, we have a business strategy internally that we're putting together to make money off of something, and we want to make money off of something that's sustainable and that's not going to be undercut by free alternatives. So that's what we're doing. Is we were forced, just in general, to come up with a better business model, because licensing is not a scalable, it's not $1 billion business opportunity, and investors don't like consulting companies. They don't like anything that's just a way of making money. But if it doesn't have the potential of becoming the next Facebook or Google, it just doesn't have the huge upside potential necessary to risk a lot of money with the operation. So we're working on bigger and better plans.
Has this made a pretty big I mean, obviously, the changes here with respect to the backing that you guys have received have opened this up as a possibility. Would that be a fair assessment of the situation?
We made this choice independent of any investment money. We recognized that in order to get more money, we needed a business plan that doesn't depend upon licensing, and that licensing was a small line item of the pie. It's so small that it's not even worth considering. So, yeah, that's what it came down to.
And are there any details that you can provide on what your plans are, or is this something that has been kind of decided to keep it kind of under the radar for the time being?
Our plans basically boil down to making blockchain technology ubiquitous and cheap and easy we're targeting developers with what we're doing, at least initially. That's about all I can say at this point.
Well, that's a great hint. I don't mean to go too far back into our conversation, but Old Depost did ask a question. He said, "Is collateral other than BTS supported already?" As in the with respect
Yes.
to like okay. So BitUSD could back gold today if somebody made it happen.
Yes, it'd be gold USD, right? You can only have one collateral per asset because the collateral affects the quality of the asset and the risk profile of the asset. So USD backed by BitShares is different than USD backed by gold or gold backed by USD. So we talked a little bit about that early on, how I think we should have new assets that are traded against something stable, like a fiat currency, and some other thing like the national average gas price or gold or oil, something that's volatile that people can't get other places. And by backing those bid assets with another bid asset that's stable, you support both markets simultaneously. Lucky Bet said electricity prices, and yes, electricity is something I would love to be able to buy an asset that's tied to the price of a kilowatt hour of electricity. My problem is who would want to sell that asset? That's a one-way street. It goes up. It doesn't change very quickly. There's not any volatility, so traders aren't terribly interested in that asset because governments basically regulate the price, and so in terms of volatility, it doesn't change too much, which means I'm not going to short the asset. It's a guaranteed long-term loser, and compared to dollars, it's inflating. So without any volatility, there's no demand for trading the asset. So I'm not quite sure where the incentive is for both sides. So if we could find a way to create an asset that is equal to a kilowatt hour of electricity, then and doesn't depend upon counterparty risk, like a solar facility selling electricity and buying back an asset, then I'd be all for it. I just haven't quite figured out what the magic asset is or equation is for doing that type of thing. Something that's
one question.
That's exactly what we're trying to do in the engineering profession, and I don't have enough time to really go into great detail about that. But our biggest complaint, looking from our position to your position, is that these bit assets and the things you're talking about kind of exist in this nebulous cloud. They're virtual. It's a virtual asset. It's having a very, very difficult time trying to represent a physical asset. And what's needed in the entire crypto space is, in fact, that lightning rod to the physical, to the tangible domains. And again, Bitcoin is worthless without that electricity that you're claiming is not worthy. You turn off the lights and you're not trading any crypto assets, period. So that's there is a connection there somewhere, even though you don't sense it. It does exist, and we're trying to store value in precisely that infrastructure. The entire space, from our point of view, is like a fish doesn't have a word for water. They just assume that this infrastructure is going to exist, their roads are going to be safe, and airplanes aren't going to fall out of the sky. But that's a stunning omission from the idea of transporting and exchanging value. So it's something we're working on. I don't have time to explain how, but we could talk about it another time.
Sure. And Dan Robles, are you planning on having any other hangouts with regard to stuff like this, or?
Well, I just got off that. The conference in Silicon Valley where we put on a presentation around virtual identity, and the idea, of course, with that is to be able to articulate knowledge assets as identifiers in this domain, and that's just a critical link. So we've been really busy just trying to get that together. And in the National Society, I got that white paper that we're publishing for the professional engineers, and that's going to be out February 2nd. So we do expect to discuss what we've seen from BitShares and from MadeSafe and some of the other crypto activity out there, and how it would benefit that cause. So that's kind of where I'm going to aggregate all these comments, and they're being vetted by the society, and it should be a fairly controversial in some ways white paper that we hope will move the market in the direction of articulating tangible assets.
Very cool. Bytemaster, do you have any input?
I'm very curious of what he has in mind. I'm very excited to see innovation in that space. So that's what we're all here to do.
The big thing will be the something called Curiosme. It's 16 minutes long, and you really do need to find 16 minutes to see the single mechanism that we'll be using to convert knowledge assets to cryptography, so that we'll be able to create these smart keys which open and close smart contracts, and that might be the route from which you're talking about actually articulating a kilowatt hour in terms of something that can be traded.
Yeah, the challenge with kilowatt hours is always in the delivery and the storage, right? But it's also something that's like we can create dollars against BitShares because of volatility in traders. So there's demand for a asset that's not dollars really. It's an asset that represents contract for difference, or used by speculators, demanded by speculators who just want to hedge price fluctuations. Absent price fluctuations, if BitShares was very stable and didn't move in price at all, there would be almost no supply of BitUSD unless we incentivize the creation of the BitUSD asset. Now, you could say that you're going to create a kilowatt hour relative to BitShares. And this is actually addresses the issue of liquidity. As a network, we've got a set of speculators that want to speculate on BitShares going up in value. Those represent the entire supply of money available to back all assets in the system. If someone's not willing to go short, then no assets can be created. But we're dividing that short liquidity among 20 or 30 different assets, which means the set of speculators who want to be short tangible and leverage up on BitShares have to pick and choose which market. Do I go short in the CNY market or the USD market? And from a practical perspective, the CNY market or the USD market, BitUSD, BitCNY, they're more or less identical utility to someone who wants a stable store of value at this point in time, which means we're dividing our liquidity and we're competing. So I almost would like to see all the liquidity poured, all the desire to short poured into one pair, and then have all other crypto assets be based off of the long side, the BitUSD or the BitCNY, as collateral for everything else, which means we maximize the liquidity for those who are short, right? And that will minimize their risk, which will minimize the spread, which will make the peg to a particular single asset the tightest possible.
Well, it just seems that you're basing this entire economy on speculation, and I just think that's so tenuous. I mean, people aren't willing to get up and go to work because speculation is providing a volatility hedge someplace. I mean, there's plenty of volatility which is intrinsic, such as the decay of infrastructure, the losses in a system, mechanical, electrical losses. There's plenty of room for volatility, plenty of places where real life volatility occurs from which these assets can be based. And I think that's where it should be. That will be a more holistic and more natural form of cryptocurrency. So that's my point.
Yeah. My point is people are talking about the weaknesses of smart coins in a thread on the forum. And I think the biggest weakness is that the supply is limited by those speculating on BitShares going up in value. If BitShares doesn't increase in value, our product that we're selling disappears. Because so it's almost a chicken and egg problem. If people start using BitUSD, the price of BitShares will go up and more people will want to short to get leverage. But there's only so much supply of people with leverage. And I think the ratio of people with leverage proportional to the ratio of people who don't want leverage is way out of balance, right? You probably have 10 people who want stability for every one person who wants leverage, which means now we have an asset that's going to fluctuate by changes in the supply and demand for stability versus leverage. And it's creating this whole new asset that no one knows how to trade. And that's the challenge we face with the bit assets in general. I don't know they're good for traders who want to hedge, but I can't see getting large amounts of savings in it unless there's a large number of people who are willing to put up a multiple of that savings as collateral without getting some form of compensation.
Hey, Dan Robles, are you talking about kind of like where the rubber meets the road, so to speak, that you've talked about in the past in terms of it feels more like a derivatives market in a lot of ways as opposed to something that's like actually backed by real gold or something to that effect?
What you guys are saying leads me to believe that this is the reason why you need an intrinsic asset in the exchange. These speculative assets depend on other things happening which people don't naturally do. So an intrinsic asset that people actually need and care about would be an ideal countermatch to the crypto space in general. That's why engineers are so interested. The idea of derivatives is a derivative is really simple. It's something whose value is derived from the value of something else. And what we've done in our economy is simply pile derivatives on top of derivatives. I mean, the value of Bitcoin is really derived from all the things you can do with it that you can't do without it, which is significant, but it's not intrinsic. And the value of people and their productivity is a derivative of the infrastructure, the roads, bridges, highways, cars, airplanes, which supports that activity. So we don't realize that what we do and what we're doing now is in fact a derivative of something else. There's another type of financial instrument we'd be interested in developing called an integral, which mathematically goes the opposite direction of a derivative. And that lands right into the domain of engineering because the infrastructure is integral to the derivative. It's integral to the value of these cryptocurrencies you're talking about. So it's an essential ingredient that we really need to somehow articulate in the blockchain space, and we believe that'll bring peace to the world. So that's our bigger picture.
Do you mind if I ask
Testing.
a few questions about the code, Dan?
Sure.
Just a bunch of random stuff. What is the ID parameter of the custom object?
Every object in the system has an ID.
Okay, so when custom objects are created, that ID should just remain. Well, I think it might be an integer field, actually.
Oh, you're talking about the operation?
Yeah, sorry.
Yeah, so the idea is that applications can distinguish their operations from each other. It's just a way of namespacing custom features that different applications are, so they can filter based on that and not have to filter based on some other heuristic of the format.
Okay, cool. Does the WebSocket API return calls in the same order as requested? Because sometimes I'll just kind of flood the WebSocket API.
It's not guaranteed.
Okay. Do proxy votes transfer, can they be passed in a line like A proxies B and B proxies C?
It only goes one level deep, but I'm looking at the possibility of adding a second level, primarily because I discovered a lot of people were proxying to Bytemaster, but I wanted to use a different account for voting other than the Bytemaster account. So rather than me having to duplicate it in the Angel account and the Bytemaster account, I'd like to have 2 layers deep. It gets complicated because we don't want to create circles or other things or further increase the complexity of vote delegation. But currently, it only goes one level deep.
So in the current situation, if I proxy you and you proxy me, that results in just 0 votes for anything, right?
Yes.
Okay. So I read in the code somewhere, this API doesn't give a way to retrieve more than the most recent 100 transactions. You can interface directly with the blockchain to get more history. How does one interface directly with the blockchain?
Well, our API is built up in layers. The very basic layer is get object. And everything within Graphene is a set of objects that are referenced by ID, and objects reference other objects by ID. And so if you get an account, you can get the account history object, which has the ID of the most recent operation, which then forms a linked list, and you can traverse it all by hand. So it's possible with the API that we have to get access to all the information, but that's not necessarily friendly. Updating the account history function to allow you to do pagination is something it's easier to do that linked list traversal in memory versus over RPC.
Well, that part makes sense to me. I was more interested where it said interface directly with the blockchain. I'm just wondering, is there, can I send a process level message as opposed to using the RPC or WebSocket API?
No, the only way to communicate is to be in process or over RPC.
Okay. And then what about things like, it looks like with the current workers, you can only query kind of their current pay balance. Would it be easy or important to have, I think it's important to have an amount that shows the total paid out to workers that, say, after they're done, I can calculate how much they expected to be paid, say 1 million BTS. If they were voted out for a day or two, it would show that they were paid a total of, say, 980,000 BTS, and I could calculate the percent that it was percent fully funded.
Those type of things are possible to add on the C++ side without doing a hard fork. It's just a matter of tracking a little extra data associated with the worker, so that whenever you withdraw funds, you keep track of the total amount that's been withdrawn, the current balance, and therefore you can add the two together and get the total paid.
Cool. Thank you. That's all I have for now.
One other question. I was trying to find the wiki page in GitHub where you describe the different API levels and how you can protect them and secure them. And one of those pages, the main page, had a Python program that was used to generate a seed key or something. I'm trying to find that page. Can you give me the name of that page, Bytemaster?
Fortunately, I can't. I'd have to search for it myself.
All right. Very good. Thanks.
Back before the upgrade, I created a user-issued asset orgasms that was with the CLI, and it was credited to a different user with 1-digit difference in the account number. Is that the kind of thing that actually will need to be fixed as part of a hard fork?
Possibly. That's the first I heard of them being credited to the wrong user. So if you can contact us, either create an issue on GitHub probably for that case, and if it's broader than just you, we'd like to know if there's any other discrepancies that we can detect. But yes, certainly if there is a migration issue, the consensus, this is the thing everyone needs to remember, the consensus is not the code, it's the intent of the code. It's the intent of what we all do. To the extent that we can correct it, we will. Let us know the details of that.
Thank you.
If it's okay with you, Bytemaster, I'd like to close this session and thank you and everybody else who has shown up.